Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, 16th of October 2019. And this week, as mentioned yesterday, we're talking almost exclusively about silver. Today and tomorrow, we shall be briefly looking at two aspects of silver: its demand as a monetary metal and the gold-to-silver ratio and their implications. So let's investigate. Today, we are looking at an article published by S&P Global Market Intelligence on the 4th of October 2019, entitled "Financial Investment to Drive Next Silver Boom Amid Industrial Demand Doubts." So let's take a look at this article. This is an article authored by Anthony Barrich in S&P Global Market Intelligence, dated the 3rd of October 2019, and essentially based on the findings of analyst Jean-Francois Bertincourt. We shall read the article and then comment upon it. It's entitled, as you can see, "Financial Investment to Drive Next Silver Boom Amid Industrial Demand Doubts." Financial investment through exchange-traded funds and related products will drive the next silver price boom, according to new research from independent Australian analyst Jean-Francois Bertincourt, amid debate over the strength of industrial demand growth going forward. The assessment tracks silver supply and demand, compares the metal's market size and price volatility with gold and the gold-to-silver ratio, then assesses ASX companies with silver exposure using mineral resource and capital expenditure benchmarks. Bertincourt's analysis found no discernible market trend by tracking silver supply and demand since 1999. I'll repeat that. Bertincourt's analysis found no discernible market trend by tracking silver supply and demand since 1999, assessing a variety of uses including jewelry, electronics, coins and bars, ethylene oxide, photovoltaics and silverware, aside from declining use in photography. Now, while silver-exposed miners hoped its use in solar panels would be a way for them to leverage the battery mineral investment thematic, that has not increased regularly. Now note this. Meanwhile, the proportion of silver's industrial use has shrunk to between 50 and 60% since 2010, from as high as 70% in the early 2000s. Now, given this trend, Bertincourt concluded that financial sector investment in both gold and silver is likely to drive the next silver price boom, particularly in the context of stagnating global demand amid uncertain industrial demand due to ongoing trade uncertainties between the US and both China and the European Union. Now, he is reinforcing what we have been saying for the past, frankly, 18 months to 2 years, and alluded to even as far back as when the channel was first set up. In other words, industrial demand for silver at the moment, and particularly with declining GDP growth, is likely to fall in comparison with its demand for it as a monetary metal. And it is going to be this reliance on silver's demand as a monetary metal that if we are going to see a major price hike, and we mention if, and by a major price hike I'm not talking about $5, it's going to be the result of this sector, this demand for silver as a monetary metal, not for its industrial usage, certainly not in the next few years, because that is envisaged to fall. It's logical for us to conclude that if we're all facing recession and demand is going to fall for goods and services, but particularly for manufactured goods, then the demand for silver, unless there is some invention, concoction, apparatus, or medical requirement that is going to demand enormous supplies of silver, which we cannot at this moment forecast or see on the horizon, unless this raises its head, then we will only see silver skyrocket, if it's ever going to do that, as a result of financial demand based on silver acting as a monetary metal. Certainly in the foreseeable future. And this report is supporting that view. Let's continue. This is in contrast to the 2010 to 2012 boom, when silver investment soared by over 48%, at the start of which period mine producers ended a 4-year run of de-hedging. Government sales rebounded strongly and scrap availability reached a new record at 215 million ounces. This is the key bit. Given trade issues such as those between the US and China, it's difficult to see industrial demand growing substantially. So financial investment will drive silver prices, Bertincourt told S&P Global Market Intelligence. Much of the financial investment is likely to come in the form of ETFs, exchange-traded funds, which have seen some correlation with silver prices. The iShares Silver Trust, a direct silver bullion ETF, has nearly $5 billion in assets under management, more than those of the 11 other major US silver ETFs combined, Bertincourt noted. Now, while annual silver supply is about 1 billion ounces versus 144 million ounces of gold, the yellow metal's market value is 11 times bigger when combining annual supply with ETF holdings at the year end. Bertincourt said this is a key factor in silver's higher volatility, as money movements have had a greater impact on the silver price than the gold price. And this is what we actually covered and mentioned in some force in our video yesterday. And if you haven't seen it, we've put a link in the description box below. It was entitled, "Silver has a bright future, but when?" Let's continue. Meanwhile, the gold to silver ratio is currently about 80 to 1, which is much higher than the 5-year average of about 50 to 1, a sign which is often the precursor to a silver bull run. Silver Mines Limited Managing Director Anthony McClure told the Denver Gold Forum in September. Now, we would agree with that in principle because it's a factual statement. But there is nothing to say that silver has to fall back to that 50 to 1 level. At the time of this video, it's approximately 83 to 84 to 1. So unless there was a sudden increase in demand for silver over gold, then that gap is not going to be made up. However, if you have a scenario whereby both gold and silver is demanded and the gold price reaches that level, beyond which it exceeds the ability of the normal man in the street to afford, then we could certainly see those people buying silver and therefore that gold to silver ratio decline. Or if global trade picked up dramatically and there was a huge influx for the demand for silver product, the gold to silver ratio would decline as well. But we all know that's not going to happen in the next 2 or 3 years. Myanmar Metals Limited CEO John Lam, who released a recorded interview with Bertincourt about the analyst silver piece to the ASX on October 3rd, told S&P Global Market Intelligence that if the gold to silver ratio normalizes, question is what's normal, back to its long-term average, silver should be in the mid US $20 an ounce range before too long. Now, he's not even saying $50 or $100 or $1,000 or big sphere $100,000 an ounce. We're talking about mid-$20 range. And that's if it normalizes back to its long-term average, which we doubt that it will. It's possible, but we doubt it. Unless the scenario I mentioned a few minutes ago comes about. He said, growth in advanced electronics, solar power and biotech, silver's key industrial drivers, would boost the precious metals price and is particularly good value for money for investors versus gold, when considering gold is about 15 times rarer than silver in the Earth's crust, yet it is 85 times the price. The point he is missing, and we would suggest deliberately so because of the nature of his company, is that this would hold true if gold and silver were what economists call perfect substitutes. Just because something is rarer than something else by 15 times doesn't mean the price has to only be 15 times more. And that is a major fault and a major misunderstanding that people have in this marketplace. There are many items you can buy that are rarer than others by 10, 15, 20, 50, 100 times more. But it doesn't mean the price has to directly reflect that, unless they are perfect substitutes. Now, we do agree with this, and we won't go into the names now because then it becomes a little complicated in too many names. He also pointed to the lack of good silver projects on the horizon. And that we would agree with. So let's end this article now and we'll comment further. It's interesting that Bertincourt is of the same opinion as us. Tomorrow we shall discuss why the gold to silver ratio is both important but cannot at the same time be totally relied upon, and also the extent that the physical demand for silver as a monetary metal has to rise significantly if one is to see price ranges above the mid-20s, as mentioned in this report. Now, yesterday's video entitled Silver Has a Bright Future But When, where we quoted a report from Metals Focus, which showed that institutional investors are now at last beginning to show an interest in silver, whereas previously it was almost exclusively gold, that report concluded with the words, quote, "This means that the relationship between the performance of the global economy and the silver price is far from clear-cut. News of slower growth can weigh on silver, as industrial commodities are sold off. But as the macro backdrop deteriorates further, leading to stock market weakness, silver will benefit as investors adjust their portfolios in favor of precious metals," unquote. So there does appear to be light at the end of the tunnel. However, both gold and silver will also have to contend with the possibility, and it's just a possibility, that central banks will and governments will be so determined to counter the approaching recession with such low interest rates and QE, we could still possibly see a last leg in the equity bull market before attention is more seriously diverted to precious metals. So tomorrow we shall talk about gold and silver ratio, as well as looking at the physical demand for silver bullion in particular. And to conclude, we have provided links to our 2019 forecast and potential limits, where we believe it could potentially go, in the description box below. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.